Check, please.
Hey, welcome back to Everything Money. We're updating you on Foot Locker. Had a colossally terrible day today. Paul and Mo loved this company in the 20s in our previous videos. Now it might be falling into value territory. So what happened today, boys? Tell our viewers what happened with Foot Locker, why the stock is collapsing, and what you would do with it moving forward. I welcome in Paul and Mo. Go ahead, Paul.
Foot Locker is a great learning lesson.
Tell me
2
why.
years ago, Mo and I loved Foot Locker in the low 20s. I sold some puts thinking it was going to go lower. It never happened. It just skyrocketed. So this is our Everything Money software. Let me pull up Foot Locker just to show you guys how it's done.
Good boy.
So here's the chart. We were loving it over here. It went over here. Mo and I were both kicking ourselves in the foot. Like, what the heck? And now it's back down to $29. It's fallen over half since its peak in last year in May. So we felt stupid. Now, this is why we urge margin of safety. Mo, what's the reason why they've fallen so much today?
So Nike supplies them with about 75% of their merchandise. And Nike has said that they are going to do more direct access to their consumers. So more Nike.com, it's essentially. And that's really going to affect Foot Locker now because they're not going to go third party anymore.
Has Nike, and I don't know if you've read enough about the article because we literally decided to do this video minutes before we started recording. Did Nike say specifically we're going to stop sending, like, is this going to affect Dick's?
Don't know.
So I don't know. So this is
haven't dug into it enough, but Nike specifically said we do not, anything that we do in stores, they said this a couple of months ago on their earnings, they want to do like exclusive things. They want to have exclusive things at Foot Locker, exclusive things at Dick's Sporting Goods.
Actually, that's pretty good. Yeah. I like that. So what's the learning lesson here? Mo and I love this in the low 20s. We would have felt like kings at 60 and it's fallen in half. What's the learning lesson?
You tell me, baby.
Margin of safety.
Yeah, so let me break this down for the viewers at home. I never grasped this concept that, well, stocks could go down, number one, and when I'm buying a stock, I have to give myself some room to fall and not want to jump out of a building. But Paul, has this happened? I mean, has this fallen? Have we plowed through any margin of safety with Foot Locker? Or where are we with this thing? I mean, this is confusing.
Well, it's not about margin of safety as of today. It's about when 3 years ago when I bought 2 years ago when I wanted to buy Foot Locker.
I see.
So Warren Buffett has a great analogy. The bridge builder who wants 10,000-pound trucks to be able to go across their bridge, they don't build the bridge assuming 10,000-pound trucks. They build the bridge assuming 20,000-pound trucks. If you get the investment philosophy of just paying a lot less than you think something is worth, you will do well. If you try to buy something for 30 or 40%, because guess what happens? Things like this. I did not see this on any of the radar. Now, I'm sure Foot Locker had in its 10K saying, hey, this is a risk that of all of a sudden Nike changed its, but some of those risks, you sit there and go, I mean, that's an obscure risk.
Very obscure risk.
That's like saying, if all of a sudden people, that's not like it, but let's say there's a risk. If all of a sudden people stop wearing shoes.
I thought the same thing. Yeah, that people stop playing basketball. You don't need basketball shoes anymore.
Yeah, it's like, is this a realistic? I don't know. I would have never thought it was realistic. I would have thought the biggest risk to Foot Locker was people are just going to keep buying more and more online and stop going to stores. But now all of a sudden it's Nike says, hey, we're not going to do as much with you guys because we're having a great, like now when I want to buy Nike shoes, do I go to Dick's and Foot Locker? Yes, I do. But if I want something specific, Nike gives all these modifications. You can go make all these selections on how you want your shoe to look. Why would I go to Foot Locker and buy what's in stock?
Yeah, I do everything on Nike.com. I have a pair of shoes coming today.
This is starting to make sense to you, and you're out there sort of wandering in a world and need some guidance. You can join our Everything Money community. You can have the software behind Paul and talk to people. Paul, tell them about it.
So the best thing has been the last few weeks, people reaching out on our chat and saying to me, Paul, this is amazing. Literally, if I didn't have this chat with thousands of people in there, I don't know what I'd be feeling right now. And they ask me questions, I respond, I'm active, and they're active. We created this so that when you're at home alone with your thoughts and markets going down, you're not building yourself into a point of fear. You can be in this chat and talk to thousands of people, talk to us and say, what should I be doing right now? Being patient. This is what we always talk about. That's what I love. I love seeing that in our chat. In our chat, people say, this is what Paul has been teaching us all this time. Is when times get tough, we need to be emotionally calm. Mm-hmm. When Facebook is down 35% from when I bought it, zero fear. Alibaba's down 30% from when I bought it, zero fear. Don't care at all. I'm trying to buy more. That's what we do in these chats. Now, granted, you also get all of this stuff and a great community and exclusive content and 8 pillars and all that stuff. If you watch any of our videos, you get all of that. But that alone, the emotional $1 a day can have you feel calm and not sell at the wrong time. that will lead to hundreds of thousands, if not millions of dollars in extra money for you down the road just by spending $1 a day to talk to people and say, this is what we've been talking about this entire time.
That's it, Paul. Not buy at the wrong time and not sell at the wrrong time.
Yep.
Just buy at the right time. And
So,
we've been saying it over and over. Go ahead, Paul.
You want it 2 ways. Everythingmoney.com and Patreon. Patreon you should go to if you're one of our overseas out of the US. Everythingmoney.com. You can sign up there, or Patreon. Doesn't matter. You get access to that community immediately. You get access to all of this, and everything is coming. This is a no-brainer, guys. $1 a day, and it's the emotional part. Spending $1 so you can sleep well at night. I don't know what's better.
Show folks at home why we loved this company in terms of its financials.
So we do the stock analyzer tool, and I'm going to do it right now. This is our stock analyzer tool. It allows us to assess the value of a company we want today. Now, I'm going to do this assuming Nike did not come out with that information. So I'm going to assume I'm going to go back and I'm going to do a 10-year analysis for Foot Locker. I'm going to assume -2, 0, and 2% revenue growth. Why? Because -2% because people are going to buy more online. I'm going to assume Foot Locker's not going to be hip to the jive on that one. Next, profit margin. I'm going to assume 5.5, 6, and 6.5%. Free cash flow margin, I'm going to assume 7, 7.5, and 8. PE, 8, 10, and 12. Because the growth level is not there. And then I want a 12.5% return on my money. Because remember, guys, we need that margin of safety. Hit OK. Look what I have a Foot Locker worth. It's all green. All green. So right now it's selling for $29. Now, when it was selling for $63, it would have been all red right here and red right here and green right here. Not enough margin of safety. This could be a value play right now. If you think this is look at the stock today. It's down 28% today. Is this overblown?
Yeah, our data updates a couple times a day, and Paul, it's actually down almost 36% today. So, yeah, you're right. I mean,
well, our data is 15 minutes delayed.
Yeah. So the point is,
the point of all this is
this a dying company, Paul? I mean,
by the way, I have it dying right here.
Yeah,
I have -2% revenue growth right here, and I still have it worth low in somewhere in the 30s.
Oh, I see.
This could be a value play right now, but you've got to go assess the situation now with the new information. If Nike was not going, when it was the low 20s, I loved it. Because look, it was in the low 20s and I had it worth, it was worth probably double that. That's why go back to look at our videos. I loved Foot Locker back then. And I sold puts because I thought the market was not going to rebound the way it did. I thought I'll be able to buy this company for a lot lower price. Let me sell puts at 15, 12, $16. And guess what happened? The stock went right through the roof. Okay, I didn't get the shares.
Mo, I'm wondering if Foot Locker can adapt. Can they put an iPad next to a shoe and if you're interested in a shoe,
that's a freaking great idea.
You can queue up because I made those custom LeBrons 10 years ago, all the colors, the tags, the name, the flames. I got Paul's initials in the back of it just because I love them. And I mean, but how do they recover from this if you take everything Nike out of there?
Man, I don't know. And I think I said this in our previous video that we did. I stopped selling my puts on Foot Locker because I was worried about their online presence. I mean, I don't think to go to footlocker.com. That's just, I go to Amazon, I go to Dick's Sporting Goods, I go to Nike. I go to Adidas, Puma, whatever it is. Also, malls are a concern for me.
Yeah, and that's where Foot Lockers
people love to shop, for sure. And I don't think all malls are going to go away, but they have a very strong presence in malls. And I worry about that. I worry about malls.
Now, let's go even more crazy. Let's go -5% growth on the low end. Okay. If Foot Locker fell at $15, would I buy it? Maybe I would. If I thought the Nike thing was overblown, I probably would. That's the point of investing. You have to put that margin of safety in there because you don't know everything about a company. You don't know what's going to happen about everything. All of a sudden, Nike announces, what if Nike just announced, we're not selling anything in any store anymore. It's all online and our stores. That's it. Because we figured out how to make a shoe within one day and ship to your home.
So, Paul, for our viewers at home, when you say put a margin of safety, what exactly are you saying?
Basically, the bridge builder. You want 10,000 pounds to go across, build it for 20,000 pounds. When it comes to investing, you think a company is worth $20, buy it when it starts hitting $14, $13. That's the margin of safety. The bigger the margin of safety, the better you're going to do. That's it.
Because sure enough, when you go through the stock analyzer tool, we get some criticism. Paul, it's a little too conservative. How dare you put, they're growing at 30%. Why would you put 12% growth? And
Alibaba's prime example, 40% growth in the last 10 years. I assumed 8 and 10%. And guess what? Now they're saying we're worried about getting low double-digit revenue growth. Great. Still higher than I assumed. Still better than I assumed.
And even at that level is great value.
Yeah.
And
I'm good with it.
Room for price growth.
I'm good with it. And guess what? There's 10,000 stocks out there. You need to find 20 to 40 that fit that criteria. That's 0.2 to 0.4% of them. That's it. That's it.
Just a couple bangers.
That's it. Our class in high school was 200 people. 0.2 to 0.4% of that isn't even one person. That's the pool we're talking about here. Seth and I graduated from high school of 200 kids in our high school class. It would have been less than one person we need to find that fit our criteria.
So it's a lot of no's till we find a really great yes.
Your job is to say no. Warren Buffett and Charlie Munger say something I always agree with, and it's funny because people criticize me of it. Paul, you say no too much. Exactly. I say no too much. That's my goal. My time is valuable. My money is valuable. I only want to say yes when I'm very convinced.
In the end, Paul, war is upon us with the Ukraine. Crazy things are happening with Foot Locker. I guess you're right. Like the concept of downside risk really needs to. You don't look as dumb as everyone said when things start falling, Paul. You look kind of right.
I'm not right yet. I'm still have a long way to go before I'm right because the market's still a lot higher than I ever thought it would ever go. But I do believe it'll end up very well. The NASDAQ was at 5,100 in 2000, ended up at a low of 1,100. It fell 83%. Guys, this will end up very, very ugly for a lot of people. I'm sorry, and that's just the reality of it. I really, truly believe this because I look at it, and if you look at the stocks that were hyped in the last few years and how much they've fallen, it's just the start. It is just the start. That's it. And I'm going to go ahead, Mo.
It's quite shocking to look now and see which stocks are back at coronavirus levels, like PayPal, Square, those companies.
Oh, yeah, PayPal. I forgot about that.
Just in August, people were saying that we're complete morons for saying that this should fall in half, or if not more. And now they're there.
Well, look at Palantir. Levels. I was like, yeah, look at it at $5. It got as low as $9 the other day from a high of 40. People thought I was crazy. Look at Peloton. I was like, I can't even value this thing, but I would not be touching it anywhere close to 180. I literally said, I think in one of my videos, I said I didn't want to give a price for it because one, I can't value it, and two, it's probably too low. People think I'm insane.
So I think PayPal is the best example, though, because PayPal, like when we pull it up on 8 Pillars, it's just overvaluation.
Yeah.
Good company, but even good companies fall.
And how much is it down? Let's go to our software real quick.
I think it was a high of like 290.
Let's look at PayPal here. PayPal's high was 310.
310.
And it's now at 106. It hit a low of 95 the other day. There you go.
This
310 and 95.
This is what I mean was when you said that, it said, back in the past, you said PayPal had to fall in half or even more.
And by the way,
I doubted you. That's not going to happen.
Seth, look at Facebook. Same.
Yeah. By the way, it was 310 in July.
Yep.
9 months ago, it was 3. If I told you in 9 months it was going to drop 66%, what would you? I would even thought that's crazy.
Look at Square.
Look at Square.
Look when Square was at its high. I think it was late August or something.
Square hit a high of 288 in roughly August.
And then look where it was in November.
Well, November. Oh my gosh, you're right.
Yeah.
November, it was still 264.
Yep, exactly.
And it hit a low of $83.
Exactly.
So what does this, Paul, what does this mean for our viewers at home?
Stop the hype train, learn a process. Guys, it's boring. I always say about value investing, and Seth loves this. We have to be wrong we have to be viewed as wrong all the time.
Yes.
When stocks are up, we have to be viewed wrong for not buying them. When stocks are down, you guys are so stupid for buying them. That's the point. If you have a hard time being different, it's not going to work. That's why we talk about the community, because everybody here loves being different. Everybody here sees the value in it. 6,000 people in this chat always talking. They see the value in being different. It's hard, but guess what? What would you rather? How big is your bank? What's bigger, your bank account or your ego? Because if it matters to look right to other people, then your ego will always be bigger than your bank account. If your goal is you don't care, your bank account will always be bigger than your ego. That's just it. And this comes from somebody with a massive ego. I have a massive ego, but I love it when people tell me I'm wrong because I know I'm onto something. When everybody hates something, I know I'm onto something.
In the end, folks, we've been stressing this for years, and it's really, I'm starting to grasp it in my mind, the concept of not only downside risk, but when you don't lose out 40, 50, 60, upwards of 90% on a stock, it is better to not make any money in the market. It's better to stay at zero than lose out and make a poor investment where you can lose your ass, Paul. And a lot of YouTubers now, Paul, they have put way too much money in a lot of these frothy stocks that are just crashing down, and it's sad for some of them, I think.
It is sad, but hey, listen, it's got to happen. And my girlfriend says, Paul, when you really make a lot of money, it's going to be at everybody else's cost. Like, it's going to happen anyhow. I might as well try to profit off of it. I can't stop the market from falling. I'm just going to observe what I see and make decisions based on that. The market's going to do what it's going to do. Just because I'm sitting there saying it's overpriced doesn't mean the market's going to fall. I'm not that big yet. If Warren Buffett came out tomorrow and said, the S&P is worth 1,500, I don't think the S&P would probably fall that day. But other than that, I don't think it would. I think people are still going to have their emotions. Say, well, he's wrong. He's day 91. He's stupid. That's just the way it is.
That's our take. Join the community. You're going to love it. You can talk with us, interact with us. You get exclusive content from us, and you get that awesome data to make better decisions for the remainder of your life. Paul, you've said that to me in the past too. People say, you keep reminding me that I have a long investing career ahead of me. So I might as well learn now, and I'll be flossing when I'm 60. So.
Yeah, you'll be really flossing.
Final thumbs up, subscribe. We'll see you next video. Thanks for watching.